Stop everything. Step away from your trading apps. Step away from the crypto charts. Tell whoever's in the room with you that you need complete silence for the next 15 minutes. Because what just happened in the financial markets this morning is so significant, so telling, and so incredibly revealing about what is coming next, that if you do not understand it, you're going to find yourself on the absolute wrong side of one of the biggest capital rotations we have seen in years. Ladies and gentlemen, welcome back to Veiled Wealth. At 8:43 a.m. this morning Eastern Time, silver did something that should have every single investor on this planet paying attention. It exploded. It jumped 2.21% in a matter of hours. It ripped through resistance and closed at $78.61 per ounce. And it did this while Bitcoin sat there bleeding, while Ethereum continued its slow bleed lower, while the entire cryptocurrency market looked like a patient in the ICU waiting for someone to pull the plug. But that price move is just the symptom. The real story, the story that the mainstream financial media is desperately trying to bury, is what triggered this move. And more importantly, what Goldman Sachs just warned is coming next. While you were sleeping, while you were checking your Bitcoin portfolio and hoping for a bounce, Goldman Sachs issued a forecast that should terrify every single crypto investor and excite every single precious metals holder. They warned that silver volatility is coming. Not just normal volatility, the kind of volatility that could send shockwaves through cryptocurrency markets. The kind of volatility that redefines how investors think about safe haven assets. The kind that separates the people who understand what is happening from the people who are about to become exit liquidity for smarter money. Let me break down exactly what happened this morning and why it matters more than anything else you will hear today. The U.S. Department of Labor released the December jobs report. This is the non-farm payrolls number, the most important employment data point the Federal Reserve watches when deciding on interest rates. And it missed. It missed badly. Hiring slowed dramatically. The labor market, which the Fed has been pointing to as evidence that the economy is strong enough to handle high interest rates, just showed a crack. A big crack. Now let me explain what this means in plain English. When the jobs number comes in weak, it tells the Fed the economy is slowing down. When the economy slows down, the Fed has to respond. They have to cut rates. They have to make borrowing cheaper. They have to inject liquidity into the system to prevent a recession. And when the market smells rate cuts coming, capital flows into assets that benefit from that environment. Assets like silver, like gold, assets that have been suppressed by high interest rates for years. This is exactly what happened this morning. The moment that jobs number hit the wires, the algorithms kicked in. The smart money started buying. Silver went vertical. 2.21% in a single session is not a normal move. That is not noise. That's a signal. But silver wasn't alone. Gold climbed to $4,188. Platinum jumped 1.60%. And palladium, the metal nobody talks about, but smart money has been accumulating, absolutely soared, ripping 4.3% higher. When you see the entire precious metals complex moving together like this on the same catalyst, that is not random. That is coordinated capital flow. That is institutions making a decision about where they want to be positioned for what comes next. And what comes next, according to Goldman Sachs, is volatility unlike anything we have seen in years. Let me read you what Goldman is saying because I want you to understand this directly from the source. They are warning that silver price volatility could shake crypto markets. They say the interplay between silver and cryptocurrencies like Bitcoin and Ethereum is more significant than many realize. They are telling their clients that as economic uncertainty looms, silver's role as a safe haven could either compete with or complement digital currencies depending on market sentiment. Do you understand what they are really saying here? Let me translate the Wall Street speak. Goldman Sachs is telling you that money is about to move. Big money, institutional money. And they are saying that money might be flowing out of crypto and into precious metals. They never commit directly, they always hedge. But read between the lines. The message is crystal clear. Silver is about to become the story, and crypto might be the casualty. Look at the numbers. Bitcoin is sitting at $9,970, down slightly in the last 24 hours. It's stuck. It's going nowhere. Ethereum is worse, bleeding slowly but consistently. The altcoins, Cardano, Solana, are struggling. This is not what a healthy crypto bull market looks like. This is what a market in transition looks like. This is what it looks like when capital starts to rotate. When the smart money starts to question whether digital assets are really the best place to be in an environment of economic uncertainty. Goldman Sachs sees this, and they are positioning their clients accordingly. Now, why silver specifically? Because this is where the opportunity becomes incredibly compelling. Silver is unique. It is not just a monetary metal like gold. It is also an industrial metal. It is required for solar panels, electronics, medical devices, military applications. Demand for silver is driven by actual industrial consumption that cannot be substituted. And here's the thing. Industrial demand does not go away during economic uncertainty. The green energy transition, the electrification of transportation, these trends are accelerating. So you have a metal that benefits from safe haven demand when the economy weakens and rate cuts come, but also benefits from industrial demand that continues regardless of conditions. That setup almost never happens. And it creates the conditions for explosive moves. Goldman's models are showing that silver prices have already fluctuated by over 8% in the past quarter. They see inflation remaining stubbornly high. They see industrial demand surging. They see geopolitical tensions disrupting supply chains. This is a perfect storm. And where is crypto in all of this? Where do Bitcoin and Ethereum fit into Goldman's framework? They fit as a question mark. Goldman is essentially saying, we do not know if crypto will benefit from this environment or suffer from it. They don't know if Bitcoin will act like digital gold or like a risk asset that gets crushed when volatility spikes. And if Goldman Sachs, with all their resources and analysts, does not know what crypto is going to do, what makes you think you know? This is the key insight. They are telling you the reliable play, the predictable play, is precious metals. Silver they can model, silver they can predict, and they are predicting volatility that shakes markets. Let me connect this back to this morning's price action. The jobs report comes in weak, rate cuts become more likely. Smart money buys silver, gold, platinum, prices surge. At the same time, crypto does nothing. The capital flowing into precious metals is not flowing into crypto. It is flowing away from it, or at minimum, ignoring it entirely. This is the rotation in real time. This is institutional capital making a decision. They didn't buy Bitcoin on the weak jobs number. They bought silver. And this is just the beginning. If Goldman is right about volatility increasing, if more economic data suggests rate cuts, the flows into precious metals will accelerate. The relative performance versus crypto is going to become impossible to ignore. I know many watching this hold both asset classes. You think you are diversified. But are you really covered? Goldman Sachs is warning that silver volatility could shake crypto markets. If they are right, and a spike in silver volatility creates a risk-off environment that crushes crypto, are you positioned for that? Are you overweight in digital assets because that's what worked for the last few years? The market doesn't care what worked before. It cares about what is working now. And right now, precious metals are working. Let me talk about the technical picture. Silver just closed at 78.61, a 2.21% move in a single session. That is powerful momentum. The next resistance is around 82.60. If we break through that with conviction, the path to $90 opens up immediately. Support sits around 75.50. The structure is bullish. The momentum is bullish. And the fundamental catalysts, the weak jobs report, the Goldman warning, the potential for Fed rate cuts, all support the technical picture. Compare this to Bitcoin's chart. It is stuck in a range, consolidating with neutral momentum. There is no clear catalyst to push it higher. The Fed has been holding rates high, trying to convince the market they are serious about inflation. But this jobs report changed the calculus. The labor market is cracking. They cannot ignore this. They are going to have to respond by cutting rates. The futures market is already pricing this in. And when rates go down, when the Fed pivots, precious metals explode. This is history. Go back to 2019, go back to 2008. Every easing cycle, precious metals outperformed. We are at that same inflection point right now. The data is turning. The Fed will respond. I want to address the crypto holders directly. I am not telling you to sell everything. The point is about allocation and risk management. It is about understanding that markets rotate. Goldman Sachs just gave you a warning. Are you going to ignore it? Or are you going to take some chips off the table and diversify into the asset class that one of the biggest? We are living through unprecedented economic uncertainty. Where do you want your wealth? In digital tokens untested in a true global crisis? Or in metals that have been money for 5,000 years? The signal this morning was crystal clear. The market voted with its capital and the vote was decisive. Silver is moving. Crypto is not. Goldman Sachs is not telling you this to help you. They are positioning their own clients and they need liquidity on the other side. They need someone to buy what they are selling. If you are overweight crypto and underweight precious metals right now, you might be the liquidity Goldman needs. Today was a signal. The jobs miss, the silver surge, the Goldman warning, all of it points in the same direction. Capital is rotating. Precious metals are catching a bid. Position yourself accordingly. Your future self will thank you. The signal has been given. The smart money is moving. The question is whether you're going to move with it or get left behind. This is veiled wealth. If this breakdown opened your eyes to the rotation underway, make sure you subscribe. Share this with someone who needs to hear it before they make a mistake they will regret. The markets are speaking. Goldman is warning. Silver is surging. Are you listening?